Hi, everyone. This is Arry Yu, Chair of the Cascadia Blockchain Council and your host for Windshield Time and also the Blockchain Underground. Today, we had a really great guest, Ivan from Stably. Stably is a stable coin as a business company based here in Seattle, Washington. And so Ivan came and joined us and talked to us all about stable coins and so much more. Hope you learned as much as I did. And don't forget, we have these every Friday from 12 to 1 p.m. PST. You can find us on meetup.com. Just look under Blockchain Underground. Don't forget to rate, review, subscribe, and share. And thanks for joining us. Bye. Thank you everyone for joining our weekly AMA. Today we have Ivan from the Stably team joining us. Unfortunately, Corey ended up with COVID after all of his recent travels. And they also just raised raised around. So they're just coming off that. So a lot of intensive work coming from the Stably team. But we have Ivan here to help us with questions and give us some more info about what's going on with Stably and learning about stable coins. So I'll hand the microphone over to Ivan. Ivan, do you want to give an intro of yourself? How did you get involved in crypto? How long have you been with Stably? How's Corey as a boss? Just
You want all the dirty details. Sure,
yes,
sure. Well, this is being recorded, so I'll make sure I choose my words carefully. So yeah, as Arry mentioned, my name's Ivan Inchauste, or Ivan Inchauste, however you'd like to say it. I am Stably's Director of Finance and Capital Markets. A little bit of background on myself. I came from the traditional finance space. I've worked in asset management and wealth management in a variety of different roles, spanning from complex derivatives all the way to advisory. Prior to Stably, but I guess that has to do with Stably is that Corey and I actually have known each other for quite some time. Corey's obviously the CEO of Stably. Little known fact here, I was the one that introduced. I was the one that introduced. Oh, I think somebody's on. Needs to get muted.
Let me mute him.
Corey, I was actually the one that introduced Bitcoin to Corey way back in 2013, but we won't tell anybody that. Back then, I was actually mining and got heavily involved with that aspect of the business while still working in traditional finance. So I've been kind of with my finger on the pulse since then, and recently joined Stably here just in 2021. And so I lead all the efforts related to the sort of financial aspects and really help Corey on the sort of capital raising and investor relations, corporate governance, and all of these other things. So awesome. That's how I found myself at Stably.
Welcome to Stably. I guess, how did you get into Bitcoin then? You introduced Corey to Bitcoin in 2013. How did you get into Bitcoin back then? Because like back then there was like Silk Road and it was like super weird people's stuff. So like, how did you decide that you were going to actually invest time into this weird people crypto stuff, Bitcoin?
Yeah, no, that's a good question. So I had a friend that was even more fringed than I am and had been involved before that. And I just remember going to his house and he would be talking about this crypto thing. And he was also a decently well-known DJ here in Seattle. And I feel like a lot of my friends that do DJ or like produce music have known about crypto. They're some of the earliest adopters of crypto that I had ever seen. And so I was like, oh, okay. Well, he was telling me about it. He actually started a crypto kind of co-location data center to host miners. He was like one of the first people to do that here in Wenatchee. Has some of the cheapest power in the country. So I became familiar with crypto and specifically Bitcoin and mining through him. And from there, I continued my traditional finance career, but, would continually just kind of re-engage with crypto. I found very quickly that mining was not a very profitable endeavor at the retail space. I ended up buying a bunch of crypto miners from a company that eventually went out of business. Like it was, it's a whole those were the early days, very, very Wild West. But I do remember this one time where I had a bunch of these miners set up in my house and I blew out the power like 3 times in one day. And I was like, I need to stop. I'm probably going to cause a fire. And I need to get these hosted at my friend's co-location center to be able to do. So that was really my introduction to crypto. And then I've always been fascinated with financial markets. And as crypto has developed, as there's been centralized exchanges and decentralized exchanges, the financial aspect, the investment aspect, how it fits into a portfolio has really become of utmost interest to me as an investor, and personally and professionally.
Wow. And then for folks that don't know about Stably, what's Stably?
Yeah, so Stably is a stablecoin provider or a asset tokenization infrastructure company, which is a mouthful. But really what Stably does, if I can just kind of narrow it down to a really kind of fine scope, is Stably provides stablecoins for emerging blockchains. Emerging blockchains being those up and coming blockchains, not Bitcoin, not Ethereum, smaller chains that are up and coming, that are really starting to develop their DeFi ecosystem. And the backbone of DeFi is stablecoins, right? This stable source of value that you can lend, you can borrow, you can trade. I personally think that stablecoins are kind of the gateway into mass adoption for crypto, and particularly DeFi. Right? I mean, I think we're still really early in crypto just overall, but most people's introduction prior to now, or let's say 2020, has been Bitcoin, Ethereum. Those are kind of the big ones, maybe Doge and things like that. But yet really mainstream and more like institutional financial adoption, stable coins and having this stable source of value that's digitally represented is a very compelling sort of avenue to attract the next generation of investors and participants in these ecosystems.
Cool. It's really interesting having you. Even, I wanted Corey, but I'm really happy that he sent you. And for those that are joining this call, we're doing an AMA, it's recorded, it's with Ivan. I'll ask a couple of questions to start off with, and then I'll hand the opportunity to ask questions to Ivan to you. And so the way to do that is there's a reactions button at the bottom of your Zoom screen, and you click on that and you can raise your hand, or you can pop it into the chat window, however way you want to do it. But in the meantime, just please be muted so that we can hear the speaker clearly. And then when you do want to ask your question, just come on video if possible, because as out of respect for the AMA and the guest, and then ask your question and we'll go from there. I just have a couple of questions before we open it up to the community for questions. So you're a TradFi guy, right? Traditional finance guy.
Recovering TradFi, yep.
But you were also early. 2013 is like really early, OG status, in my opinion. So like for a lot of the traditional finance guys or people that are just kind of coming into learning about crypto right now, how do you bridge these two worlds? And like, why were you so early to like getting crypto? Why did you like, how does this make sense for you? And how do you help? Maybe that's not a good question. How do you help a traditional finance person like buy into this, and why should they buy into this?
Yeah, no, definitely, right. This is a really interesting question that I and sort of a person that I get coffee with, that's a good friend of mine, we go on long walks, get coffee, and talk about crypto. And this is like one of the biggest things that we talk about, because we both worked in traditional finance. He was a hedge fund manager, a quantitative hedge fund manager. I previously worked at a hedge fund. And, for us, we've always really been interested in markets, right? And a market to a large degree, or like is really just a venue of exchange. And crypto really unlocks the ability to exchange peer-to-peer in the early days. I had a wallet, you had a wallet, we could exchange value. Fantastic, right? And it was digitally, right? We felt like it was like digital cash. And then you get centralized exchanges, which if you're a traditional financial professional, you're very familiar with. And so for me, I always think about how can I communicate what's going on in crypto to my TradFi ex-colleagues in ways that they understand, sort of reason by analogy. And I say, you know what a centralized exchange is, you know what the New York Stock Exchange and NASDAQ, you have sort of this experience, you may even have a brokerage account, buy and sell stocks. Well, great thing about crypto is it's open 24/7. These exchanges, you can trade on them all the time, right? It's like Las Vegas, and the New York Stock Exchange had a baby, and then like that's what you get in crypto. So really trying to reason through analogy. I think one of the biggest issues in crypto and blockchain in particular is that it's technologically very sophisticated. There's cryptography and all these kinds of things, and we need to really reduce the barrier, the knowledge barrier, and analogy is one of the best ways to do it. So that's what I try and do for my sort of TradFi professionals and other people that are interested in getting into the industry. I mean, for me personally, I didn't work in the industry until 2021, even though I had been sort of involved and aware of what was going on. So that's
Cool.
kind of how I've thought about it.
Yeah, I really like the way you describe markets and it's a venue exchange. I like your word choice there. So that was really interesting. Another quick question is what I really like to understand from people is what perspective they're coming from. So like I tend to be more of a Bitcoiner in terms of my beliefs and opinions about the space. And so I like to let people know early on, I do tend to be more Bitcoiner than not. How about yourself? Are you more of a Bitcoiner camp, or are you more of the crypto camp, or are you like all into NFTs and GameFi and stuff like that? Like, where are you personally involved and investing these days?
Yeah, so I think to my own detriment, I probably would have made more money if I was someone in the NFT space, but at least recently. But no, I mean, for me, like I said, I have a traditional finance background, so I'm always thinking of sort of like the DeFi aspect. So really involved in different smart contract platforms, so blockchains that have the ability to have smart contract applications kind of written into them, and what are the financial service use cases. And so lending and borrowing platforms are very compelling, or what we call money markets. Decentralized exchanges with automated market making is a really, really fascinating area of not just only to be invested in, but just to keep abreast of, because there are innovations there that are happening that haven't happened in the traditional finance space, that when I see that, I'm like, ooh, it's just a little bit of time, maybe just years before Wall Street realizes that it's going to be maybe it's going to be Dow Street going forward, right? So that's what I'm really excited about, is I see all these financial service sort of applications. There's on-chain asset management, where it's like, why do I need to structure a fund when there's the ability to do very similar types of things all on chain? Obviously, talk to your lawyer, disclaimers and disclosures, but just the type of innovation that's occurring, you're not getting from these sort of monopolistic, oligopoly large banks that have had control and extracted a lot of fees from all of us. And so it's really, I love to see that sort of reduction of power from Wall Street, and hopefully it's Dow Street or something else that leads the financial revolution going forward. So I'd say predominantly, me personally invested, it's all DeFi all the way, layer 1, layer 2, lending and borrowing protocols, things of that nature. So do your own research, of course.
Yeah. Yeah, I think even right now, like, so like 2008 financial crisis is, Bitcoin was born out of that. And it was a big commentary around like how we've socialized the losses of these large financial institutions, but continue to let them privatize their profits, which is what the hell, right? And then this may be a contentious thing to bring up, but now I'm thinking about COVID and all these vaccines, and we've done the same thing. Again, here we've socialized the expenses involved in starting up these new projects and these new products. Like, taxpayers are paying for that, but we've allowed them to continue to privately continue to keep the profits. And you go, I don't know if these incentives are actually aligned in the right way that actually benefit the people in the community. I know I might be hitting a hot topic there, but I don't think we've learned our lessons here.
Do you know what they say in traditional finance or on Wall Street? They say, heads I win, tails you lose. That's effectively, to sum up what you're describing, is, and this has happened through regulation, through policymakers allowing these types of different things to happen. I mean, none of us probably have access to the high-paid lobbyists on K Street in DC to be able to really advocate for the type of initiatives that we think we really need, socially, financially, or economically, whatever it is. And so at the end of the day, it's been $1, one vote. Well, maybe in the future it's one token, one vote, and we start to move things in a more democratic fashion. And that, I think that's some of the underlying philosophy of crypto, is not sort of just libertarian, but it also can be very, very democratic if structured properly and there's the right sort of governance involved. And that's an area that I've sort of started to dip my toe into as far as research, is just DAOs and self-managed organizations and governance structures and how to make decisions through sort of an autonomous organization that is globally diverse. I mean, most, if not all of us, might be at home working nowadays, and the paradigm before 2020 was not that, right? Specifically when in traditional finance, all the Wall Street banks, as soon as they could get you back into their offices, they wanted you back, and they're quickly realizing that Mother Nature has had other plans and that we're going to have to adapt. And that's what I love about sort of crypto and the people involved. They're just so innovative and are willing to push the envelope to kind of cede control from sort of these incumbent players that have gotten fat off of all of us for the longest period of time. So,
womp womp. All right. Well,
can I chime in? Can I chime in on that point?
Yeah, Marina. Hi. Well, Marina.
Sorry about that. And it's not even a question to you. It's just more for Arry and everybody else on this point. But I would love to hear your opinion if you have one. When you're saying it's $1, one vote, now the blockchain allows an opportunity, not for me, not for you, not for Arry, but for all of us together to have an expensive lobbyist on K Street, right?
Yeah.
Which is probably what we've needed for a very long time. We just didn't have access. No.
Well, I point on that because I do work a lot in the policy world. I mean, technology.
That's why I said it was mostly for you.
Yeah, as a technology industry is like 60, 70 years old. We're youngins in the grand scheme of things compared to the agriculture industry or the banking industry. And so it's only very recently in the past, say, 5 years where the tech industry is actually employing government relations people and public policy people inside the companies. And so learning about how to interface with communities and public policy and government is a new thing in tech. Now you look at blockchain and crypto companies, even more new. It's something that we're just going to have to learn how to flex as companies, but then as people, we just don't really know how to participate more in the political system. Like, go and get to know your candidates, let them know about what you want them to be thinking about and voting for and advocating for. And, if you see bills show up as, drafts, put in your notes and like call somebody and be like, hey, that line makes no sense, right? Like in the infrastructure bill that just happened. Let your representatives actually represent you. And then your money goes a long way too, right? Whether it's $5, $10, $1,000, whatever, fits your budget, actually voting with your dollars on who, with the campaign funds. I think not just companies should be helping raise those political funds, but individual citizens, we need to do a lot better job of it. And also in the crypto space, crypto and blockchain space, we need to start putting our money into candidates and political groups that actually are going to move the needle for us, because we're too weak without it right now. We don't have the political power because we're not putting our money where it should be right now.
Well, that's why I brought it up here for everybody mostly, is that maybe if we can create some kind of a smart contract that conglomerate all our $1 bills, that means nothing to us, but to everybody together, or have some kind of a DAO, or even the layer one, solutions could have it for voting, the ones that do have the voting on, spending a little bit of money from each and pulled it together. We can buy an expensive people on K Street or whatever the hell you said. Sorry.
Yep.
Yeah, I'm really optimistic for the crypto crowd. We're very self-motivated and have the desire to improve the world. And I'm just waiting for a DAO to come out with a piece of legislation in conjunction with a senator or something. That would be awesome, right?
So cool.
Where, we all, or, whoever participates actually has a say in a vote and sort of crafting that legislation. And it's sort of crowdsourced and crowdfunded and things of that nature. I think we have the financial infrastructure to be able to do those things now. And that's what's important.
Cool. Other people with questions on stable coins or whatever you want to ask about? James, hand up. Go, James.
Hey there. Yeah, thank you for taking the question. So I'm really excited about DeFi as well. It's actually probably the reason why I initially got into the space. While I was having a conversation with, to be fair, someone that's in traditional finance, they brought up an interesting point about risk. And like how like DeFi does sound great, but I feel like a lot of people aren't talking about the potential risk associated with DeFi. Some of them including just like when there's a downturn and it's not even out of malicious, they're not paying it back, but they can't pay it back, or just fraud and things of that nature in general. So could you give us a little bit more insight on any potential risks that you see with DeFi and like stablecoins?
Yeah, so I come from the TradFi world, and risk is often defined as volatility or standard deviation. So, which is a very narrow way of looking at risk. And not to say that the friend that you were speaking to is of that belief as well, but there is this sort of philosophy that anything that moves around a lot in price is risky. There's a lot to be said there, but suffice it to say that risk or volatility in any one token is really it's kind of a blunt way to measure risk. There's in DeFi, and I'm gonna get straight to the heart to the matter, there's a lot of risk around obviously security, smart contracts, and whether they're basically bulletproof, and whether even if they've been audited, they could still be hacked, and so that's definitely an issue. I mean, we live more and more in a digital world and more of our lives digitally. So by definition, more and more of the risk vectors that are going to materialize are going to come through our interaction with whether it's the internet or a blockchain. So these are the kinds of things that we need to develop the tools to be able to handle. And with respect to fraud, I mean, it's funny speaking to TradFi people, they always think that like fraud doesn't happen in the traditional financial space, and that like it's this brand new thing in DeFi or in Bitcoin. I'm like, are you kidding me? Are you serious? I was like, you guys invented it. Like come on. The same sorts of fraud can be perpetuated in TradFi and DeFi. Yeah, so everyone has this idea that like Bitcoin and other crypto is like good for money laundering. I was like, except for the fact that all of it is on chain and all of the activity is there. So if they ever link an IP address or an email or whatever to your wallet address, the criminal is caught. And I don't think you have that type of breadcrumbs typically in the traditional financial center, sort of infrastructure. You can obfuscate things a lot easier. So I'd say everything that is probably true about TradFi is also true about DeFi, and just with some nuances to it. There's a lot of crypto that have plunged in value 80, 90+% and bounced back, right? If a stock took an 80 or 90% fall on an exchange, it would probably get delisted and not come back, and the shareholders and the board, and it would be this whole ordeal. And I think DeFi is much more robust, and sort of long term will be a much more robust and maybe even like anti-fragile system for these kinds of financial infrastructure, and moving more and more from TradFi to DeFi, having things operational 24/7 instead of just trading hours that are based out of New York. We have a sort of very Western dominated financial system instead of a globally inclusive one. So
I think Lucy had her physical hand up before she had the emoji hand up. So I'll call on Lucy. Lucy, do you want to ask your question? And then we'll go to Abby and then James.
Oh, thank you. Let me take the hand off now. Lower hand.
No problem.
Okay. Hi. Yeah. I love this group. It's so fun. I love this Slack channel. It's just nice thing to have to check on throughout the day and everything. So I'm a little bit more of a Bitcoin person, like kind of like Ari said, but just crypto in general. I think it's like email was in the 90s, where right now people just can't even understand it. And like in 20 years, everyone's going to have 4 different wallets with coins, and like everyone will just be using this stuff and without even thinking about it. Anyway, one of the things I wanted to ask, so I really love the like philosophical aspects of Bitcoin, but I'm curious, you know, between Ivan, Ari, or anyone, like, what's your approach when you're telling people about it? Like, have you had people reach that kind of epiphany moment where they're like, oh, I see why this is so powerful? You know, I mean, one of the things that this is a little morbid, but I like it. One of the things I learned that I thought it was just such a strong moment for me was that people, you know, Bitcoiners, were taking their assets and putting it all into Bitcoin so that when they die, the government can't take what they have. And I was like, that is awesome. I love that, right? And that was such a powerful just thought for me. So like, what do you guys, you know, what have you been able to tell people to help them like reach those moments if they're ready for it?
Arry, do you want to share your thoughts first, and I can go after?
Yeah, I mean, I think the most powerful thing for me is my background is I actually started in the altcoin world. So I started in tokens and tokenomics and Ethereum, and I actually did an ICO back in 2017. And so when I started learning about the crypto space, I was like, wow, this is amazing. Tokenization for the people, by the people. Like, this is amazing. You know, anybody can fund a project, you know, screw the VCs out there. Like, it was really hitting home for me. And then with the birth of my second child, I started learning more about Bitcoin. I was like, it's probably about 2020 where like it started hitting bells for me. And I think the biggest point right now is just like simple math. It's inflation, right? You have a completely inflationary product like the US dollar, or you have a disinflationary product like Bitcoin, right? With a hard cap of 21 million. And it literally is like, do I have $10 on top of $1,000? Do I own like 1%? Is that 1%? Or do I own $10 of $1 trillion that's now become $2 trillion? That's become like $80 trillion. Like, the value of my money is less and less valuable, whereas Bitcoin, there's a hard cap. And yes, a lot of them are going missing and people lose their private keys all the time. In the grand scheme of things, I think the betting on Bitcoin and Satoshis as a monetary product is actually a much more sound product than any other money that we have out there. You know, it's completely transparent. I know exactly how much is out there, I know the rate of inflation. Yes, ETH is, I think, more inflationary. It's inflationary. It's slowed down its inflation rate, but it's still inflationary as a product. So like that's the thing that's actually hit home for me in terms of why Bitcoin over any other money.
And I would add that sorry, is that you, Lucy?
No, I was just gonna say the inflation is one of those things that we've just been taught is normal, you know, like I believed that until I started learning about Bitcoin, and then I was like, wait a second, this is, you know. So anyway, just piggybacking on that, it's like breaking people of that mindset that like it doesn't have to be that way and that we're the ones getting screwed by it. So anyway, sorry, Ivan.
No worries. Yeah, that's really good. I would say when I sort of frame this for other people that haven't drank the Kool-Aid, so to speak, is the biggest risk with respect to crypto and blockchain is not participating. It's not investing and losing money, because one of the best ways for people to get paid to pay attention to it is to actually put some skin in the game, to put a little bit of money on the line, and that is the best way to have people get educated, understand what's going on in the system, sort of become sensitized to the level of volatility for some of these tokens. It's really important to just sort of make the leap of faith, and then that will be the thing that inspires you to get educated and take that next step to understand, you know, from Bitcoin to maybe Ethereum, from Ethereum to ETH, to sort of DeFi, and, you know, all, you know, stable coins and all of these other things. And so I just encourage people to take the leap. And I tell people, I was like, how many products and services do you use in your entire life that you really have a fundamental understanding of? I was like, I drive a car every day, but I have no idea how a car actually works. I know that there's a combustion engine, I know there's oil, I know there's tires and wheels and all this stuff, but like, could I really describe it to you like a mechanic does? No. I have a cell phone, I'm using a computer, I'm talking to you through all of these, things right now, but I don't know how it works really at a fundamental level. So when people say, I don't understand it, it's sort of a silly straw man argument that they're like, I don't understand it, so I don't want to get involved. And it's like, don't let that be the barrier. And by the way, you can participate in such a small level, $10, $5. It doesn't need to be, until recently, you couldn't really buy fractional portions of a share of stock. It's only recently through Robinhood and some sort of these more fintech applications that got pushed forward. So when people kind of throw that argument up, I'm just like, it doesn't really fly with me. And I say, if you had the opportunity at the nascent stage of the internet to own a piece of the internet, would you invest? And even without really understanding the full ramifications of it, I think most people in this sort of group would definitely say yes, and I think most people overall would say yes. And so that's kind of how I frame it. And then when I talk about like blockchain, I just tell people, I'm like, do you know what a phone book is? And they're like, yeah, it's got columns with people's names and addresses. I'm like, okay, that's a database. You know what a database is? Okay. Now blockchain is basically just a database, right? That allows you to move, entries, value from one person to another, one address or one phone number to the other. That's pretty much what it is, right? So there's a lot more to it. But I explain this to my aunt and uncle who know nothing and they're scared about this stuff. And I explained it to them like that. And they're like, okay, I'm like, as long as you're just like 1% to 2% more informed and educated about what this is, I've done my job. And like, that's really the important piece. And we'll be able to win this sort of incremental war of education and lowering these barriers to education, like knowledge about this stuff, by just trying to, like I said, bring it back to analogies. I know Elon Musk and other people in the sciences are all about first principles. I maybe and just have a different mindset. I'm like, how can I relate this to something that you already know? It's really basic and intuitive, and then you're at least 1% more educated and you have a better understanding. And then you yourself, as you start to get it, you will start sort of pontificating this to other people, and that's how this spreads, right? It's viral, no pun intended.
That was a really good explanation. Thank you so much, Ivan. Next up, Abby. Abe, sorry, hopefully I'm not messing it up.
No, you pronounced it correctly. So +1 Ivan to you and Arry on education is most important. I believe that education is the starting point, and it's extremely important. Just to introduce myself, my name is Abhay, and I'm running a cross-border payment startup which uses Bitcoin Lightning Network. My question, Evan, to you is, what is the primary use case of Stably? My understanding is stablecoins is like big boys games, and it's like the USDCs of the world, and countries' CBDCs equivalent would run at some point of time stablecoins. So I don't understand Stably's use case. So if you could help me understand some of that, that'll be very helpful.
Yeah, no, thank you for the question, and I'm happy to clarify. You mentioned like USDC, Tether. Those are the 800-pound gorillas, right? Stably, of course, in relation is much smaller. And when we first started, that was sort of the market that we were trying to get into, right? Become a stable coin just like these other providers. And frankly, we understood that that wasn't where we were going to compete and where we were going to shine. We took the knowledge, research, and development of being able to launch our own stablecoin and said, stablecoins are actually core infrastructure to DeFi, payments and remittance, something that you definitely just hit on, lending and borrowing. If you look at money markets in crypto, lending and borrowing, a decent proportion of that, I would say probably maybe even a majority now, has to do with lending and borrowing of stable coins, right? And then if you look at decentralized exchanges, a lot of the activity and some of the largest liquidity pools are actually pairs of stable assets and volatile crypto, right? So there's this input, just if you just sort of empirically see, there's a need or demand for wanting to have stable sources of value or access and tradability into stable sources of value that are pegged, again, to things, assets that we can pay or currencies that we can pay our taxes in, right? We still got to pay our taxes and we can't do it in crypto yet. So being able to move fluidly in and out of crypto to fiat, and also having to be able to keep our value in crypto, but also have it pegged to sort of this tangible real world assets. And really that's what Stably is about, right? Providing this sort of digital representation of a dollar on various emerging blockchains, these smaller blockchains. And you could say, okay, well, there's already a number of stable coins out there. Like, what makes Stably different? And that's really, really important, right? Again, we work with a customer segment that may not be able to work with a Circle or a Tether or Paxos or what have you, right? So there's a niche for us that we're trying to serve very well with our offering. We're also able to do it very quickly, right? We're talking weeks instead of months of development time, and we're able to do it at a price point that is very compelling for these emerging blockchains that don't have a massive war chest. So cheaper, faster, and guess what? It's backed 1-for-1 with dollars. And so you don't have to worry about it being, some other sort of esoteric instruments or, some traditional financial instruments that have some sort of credit risk. You can be rest assured that they're dollars, and then it's attested to by auditors on a monthly basis. And so it's that, Corey, the CEO and founder, one of the co-founders of Stably, he comes from a traditional finance background. I do too. We're very comfortable with regulation and compliance and these kinds of things that for DeFi native companies that started there and maybe came from more a tech perspective, that's their first time having to learn the rules and regulations. A lot of these companies, they just launch a product that might not be compliant. It's pretty much just breaking the law, and then hope they can raise enough money so that in the future they can afford the fine. And we've taken a different approach and track, and we're trying to be, compliant in doing everything as compliantly as possible within regulations, and making sure that we're doing the right thing and have the right partners involved and are getting the right advice. And that's maybe a slower way, but it's like the tortoise and the hare. Like, we're okay maybe moving with respect to regulation and compliance and things in a slower fashion to make sure we do it right the first time, because it's not the kind of thing you want to mess up.
So Evan, if I'm like a layer one, then what you're saying is that we can use use your infrastructure to issue a stable coin, and then it'll be a stable coin which is issued by Stably, or it'll be a stable coin which is issued by layer one, and I have to maintain the securities backing my stable coin, or you as infrastructure provider will also maintain the securities and I have to kind of contribute towards those securities.
Yeah, no, I get what you're asking. So it's a little bit more complicated than that. So Stably itself is not the issuer of the stablecoin. You have to be a regulated financial institution. You have to have licensing to be able to do issuance, right? And so we partner with financial institutions that have the licensing, and we provide the technology layer that facilitates the creation and destruction, minting and burning of tokens, right? So Stably, we have aspirations, and hopefully 2022 will be a really good year for us, of becoming a financial institution in our own right, so that we can bring some of those capabilities in-house and not have to necessarily rely upon third-party providers, right? So kind of moving up the supply chain to be able to do that. And so so in that case, in the future, when we are a financial institution, we would take on or assume that responsibility of being able to issue directly. But at present, again, we're not a financial institution, but have the sort of framework in place, partners in place, understand the landscape, and have the technology to be able to do this in a, again, regulatory compliant way.
Thank you, Ivan, and thank you, Abby, for the question. Next up, we have James. Hi, James. Introduce yourself and ask your question.
Hey, Ivan. So my name is James. I work at Notional Finance, which is a DeFi company. We do fixed rate lending and borrowing, so think bonds, right? We also provide a marketplace for people to trade these bonds in AMM style bonds, and I work as a smart contract developer, mostly doing risk management, liquidations, flash loans, flash swaps, all that stuff.
Yeah.
So my question is, so we currently have USDC and DAI listed as stablecoins, and I'm just wondering if you guys have plans to either provide something that's more decentralized, or maybe work with somebody, like is there sort of, is that in the planning? Because it's just kind of my personal opinion, right? If like DeFi without decentralization is just finance, right? So
Yeah.
that decentralization component is extremely important, and I'm a stickler when it comes to that. Like I don't want to give up any sort of decentralization in my, which is why Uniswap is kind of what I admire the most when it comes to contracts and how to design smart contracts. But yeah, I'd like to kind of hear your opinion on that.
Yeah, no, I think philosophically we're aligned. Just getting there requires winning people over from paradigm that is centralized, where it's convenient, it's fast, to a paradigm that is secure and more decentralized, right? So it's a progression, and I would say that stably, like at its root and sort of philosophically, is trying to get us to sort of the promised holy land that you talk about, but to get the types of capital to move over, and the traditional financial professionals and others to really kind of make that transition is slow, and it's a progression. And you have to also be able to show people that you can tether this new digital world to something that they're familiar with, right? People are going to trust that which is familiar, and what we're doing instills that sort of trust, because there is that sort of, to use this word, tether to the real world. I see you shaking your head,
Yeah,
but I think you get what I'm
listed.
saying.
We don't have tether listed specifically because of that.
Yeah. So no, I get where you're coming from, and
yeah, thanks a lot.
Yeah, we have the same view philosophically, personally, but we do understand it's a progression to get there. And one day, hopefully, our entire financial infrastructure is decentralized, but we are not there today, and we got to do the incremental work that's required to get us there. So.
All right, thanks.
Great question. Thanks, James and Ivan. Next up, Brandon. Hi, Brandon. Introduce yourself and question.
Hi, how's it going? Hey, Ivan. So name is Brandon. I've been in crypto for about that's almost 2 years now. I would describe myself as 50% Bitcoin, but I was exploring DeFi and gaming and things like that. So as far as my question, I was curious of what's your perspective in regards to stable coins and the SEC, because I know there's a lot of controversy there. There's a game of chess that's being played through lawyers and things like that. And I'm just curious of what your perspective on the SEC.
Yeah, look, I'm not going to comment on what the SEC is thinking or going to do, or Gary Gensler or anything like that, right? Sure. But look, we operate in a sort of intersection of technology and finance that right now is under sort of the microscope, right? And for a good reason, right? It's not necessarily a bad thing. And if the rules get a lot more clear, it allows us to focus on building rather than trying to guess what the regulators are, what the rules are going to be, right? I would say a more productive use of all of our times, not just at Stably, but everywhere else, just as anybody in the sort of crypto market, is not where regulation is going to fall out, but once regulation is in place, and hopefully it's the right type of regulation, we can go back to really focusing on building the right businesses within that framework, right? And so that's what I really care about. I think regulation, I'm not the kind of person that's regulation is bad. I do definitely understand that regulation is important. Policymakers are an important stakeholder in the process, as is industry, and as are we as citizens, right? And so I think the most important thing is just for us, as an industry, to have a seat at the table, because this stuff is complicated. For us as citizens also to have a voice, and that's also can be very challenging, right? But I know Arry does really good work on this. And also for the regulators to understand that, they need to understand what they're going to regulate before they're going to regulate it, right? Instead of using sort of these sweeping generalizations that like, this is that, so it's, this is how it has to be handled. I'm not a policy expert or politician or anything like that, but it just seems sort of logically to first seek to understand before, using a heavy hand, so to speak. And so whatever regulation ends up coming out, stably, we're gonna work within the confines of whatever it is and do the best work that we can. And I think that's just the right mentality to have, instead of trying to break the rules and hope you don't get caught. Like that just does, and that also gives us all a bad name, right? Like
It does.
it's like one bad apple is like, okay, well, where there's smoke, there's fire, and then we all look like criminals. And it's like, no, that's not the mentality that we should have, and that's not the way that we should work. So that's kind of my sort of personal thoughts. And I think I sort of speak for Stably in the sense that we want to make sure that we're doing things above board, and whatever the regulations will be, we'll make sure that we can innovate within those confines.
Awesome. Great. Thank you.
Of course.
Cool. Thank you, Brandon. And then I think we have enough time for maybe one, maybe two more questions. Anybody else? Or Ivan, go ahead. Or you have a question, or you want to make commentary?
Oh, a question.
Oh, Brandon, go ahead.
Yeah, so I was thinking back, so this question just crossed my mind in terms of like rules coming out. I was wondering, like, would those rules look like a big like bill, like a bundle of rules, or like would it be like something that comes out like slowly, like over time, like one law versus, and then like just gradually?
Yeah, so policy, like a new piece of legislation, that might be to like kind of what you're alluding to, like the one big thing, right?
Yes.
Or sets of bills that come out sort of in conjunction. That can be the sort of like the bomb that drops, so to speak. And then from there, regulators have to apply those rules, right? And I'm not sure how familiar everybody here is with this, but regulators don't necessarily apply the rules sort of evenly across time, meaning as there's new administrations and new regulators, different rules get enforced more than others, right? That's at least from my sort of historical reading of things in a variety of different sort of areas. Just because we have a rule on the books doesn't mean that it gets applied, right? I think that's another important thing. And then from there, there's sort of, we have another branch of government that allows for sort of a judicial process, and whether it's lawsuits and precedent and all these kinds of things, these things also get worked out in the courts. So just because a piece of legislation drops doesn't mean that that's the end all be all, right? It's we have a system in place, checks and balances in place, that will sort of over time craft what this environment will really look like. And it just takes time, and the lawyers are going to be happy because they're going to get a lot of fees as a result.
Awesome, appreciate it. Yeah, it was just like a question that crossed my mind like last second, so I was just curious to ask that.
Yeah, I feel like when like regulation like drops, or some piece of legislation drops, it's like, oh my goodness, everyone sort of probably like freaks out and scrambles to figure out what are the implications, and then it takes time to really figure out how the real world sort of intersects with that policy and how it gets applied and things of that nature.
Okay, awesome.
All right, next up we have Paul, Trader Duck. Can you come on video and ask your question and introduce yourself? Hi, Paul.
Hi, well, I don't know, my camera's not working.
Oh, okay.
Sorry. Yeah, I've been watching the markets crash for about the last week. Has anybody else noticed that? And is there any concern? It seems to me like this is a huge move.
I mean, I don't think it's as big as last year when there was like a 30% drop in one day. Although I haven't looked yet today where everything is at. So, I mean, it's big, but like, look, I think one of the things you need to get acclimated with very quickly in crypto is volatility, right? You can't like they used to do this study in traditional finance. I don't think they may still do it. I forget if it was Vanguard or Fidelity or one of those big players, that basically there's an inverse correlation between the number of times you check your trading account and your performance. And so sometimes you just got to sit on your hands and hodl, man. You just can't, like, if you've invested money, like, I'm an investor, I'm not a trader. So for me, if I'm buying something, it's because I like it fundamentally. I'm not just trying to ride some small wave of volatility. And so it's just, it just depends on sort of the way that you approach the markets. I personally just don't have the time to trade markets. I have to help run a business. So I just don't have the sort of time to really watch the tick by tick, nor is that the best use of my time. I find projects that I like sort of fundamentally and, back them and have a smart entry and exit strategy. And that's the best you can sort of hope for, right? And over time, like if you look at things as like traditional financial markets, a sort of balanced portfolio of like 60-40 stocks and bonds over a 20-year period, over any rolling 20-year period, has like pretty much never lost money, right? So like if you sort of integrate crypto into that, typically the return profile of that type of portfolio as you introduce Bitcoin and perhaps other crypto up to maybe like 10 or 15% actually improves the return profile. So I don't imagine most people here are 100% all of their assets in crypto. They probably own maybe a house and have, maybe stock investments or whatever. And maybe that'll change over time. But, a portfolio that is balanced to your liking and aligned with your risk tolerance is really important, because that'll keep you from making a bad decision and having to sell maybe when there's a bad market in a sort of a bout of distress, right? You don't want to be a forced seller. You want to be buying from a forced seller. So that's the way that I see it. But other people have definitely different mentalities or approaches to the market.
Well, I do have a different approach. I'm a technical trader.
Yep.
And as Arry will recall, on December 17th, I said I wouldn't touch Bitcoin at this point. And when pressed what levels, I said it would probably break through 40. It has.
Yep.
So I think technical trading is the way one can keep their capital secure. The number one, or should we say with a Star Trek metaphor, the prime directive is to protect capital. Buy and hold is a buy and hope strategy, and hope is not a strategy.
And Paul, my family got hit with COVID, but I do owe you a call, and we plan on having Paul come in and give us some technical analysis, technical trading 101 sometime in the next month or so. So I'm really looking forward to that. I owe you a call. I'll call you soon.
Okay, thank you.
Yep. Great questions. How about Ivan, what's the best way for people to keep in touch with you, follow Stably, and any last words, parting advice you have on this crypto stablecoin world?
Yeah, so I think probably the best way to get a hold of me is through the Slack channel. I'm on there. I haven't been as active as I'd like to be because we've been in the middle of a capital raise, but definitely through the Slack channel that works. And then as far as parting thoughts, I just really appreciate the opportunity. I know I was a substitute at the last minute, and hopefully I didn't let anybody down.
Oh, you did awesome. I really like, I think you've been a great hire to Stably, so great asset to the company. So
Thank you.
Awesome. You're not on Twitter? You're not on crypto Twitter?
No, I'm not that steeped in social media, unfortunately, or fortunately, depending on the perspective that you take.
All right, then how can people find out more about Stably? Best way to reach Stably?
So Stably has all the social media accounts, LinkedIn, Twitter. You have a website. Feel free to reach out. We obviously are a local company here in Seattle, so you'll see a lot of us in purple shirts, which I wasn't wearing today, but purple's our logo. And if you ever see somebody in a purple shirt with something that looks kind of like a ring on it, it's probably a Stablyan. And we go to the events, different conferences. So definitely, if you see us, come by, say hi.
Awesome.
sorry, I said that I'm not going to talk, but this is the last 3 minutes, so I have to. I invited a very good friend of mine who is here, and I wanted him to introduce himself. He has an amazing report every single week. And I also wanted to ask Ivan, how did you get your name, Ivan?
Okay, I always get this question. This is funny. So, because I'm not Russian, which I'm sensing from the accent, maybe you're Eastern European.
Yeah,
Marina?
I am. Sorry. That's why I was
No
asking.
worries. Yeah, so I'm not Russian, but so my dad's name is Juan, and Juan is basically John, and the equivalent of John in Russian is Ivan. So instead of calling me Junior, like Juan Junior, he gave me a name that was similar to his. So that's how they came to Ivan, or at least that's the story I tell.
It's interesting that he chose a Russian version instead of English. So can my friend Peter introduce himself for 2 seconds? Since you have 2 minutes left.
Sure.
Peter.
Hi, Peter.
Yes. Hello. Hi, everyone. Let's see if I can turn on. I'm here vacationing in Chicago, and it's good to see everyone. And long story short, I'm an ambassador for AirSwap protocol, peer-to-peer trading. I'm also a consensus ambassador in Polkadot, and I have a weekly report on Sundays at 2 p.m. and also on Mondays at 6:30. And Trader Duck, I think that was a really great question about the market. I actually 30 minutes ago sent out a question to the group if we should revisit the bear strategy conversation we had. We had a bear strategy conversation like in November when Bitcoin hit 66K. And anyway, but I sent a question out to the group if they want to talk about it or not, or revisit, some of the different key tactics that we talked about. But having said that, this seems like a really great group. How can I stay in contact with this group? Is there like a place to go or a website or something?
Email me, Arry@Yellow Umbrella Ventures, and I'll send you all the links to the group and the Slack.
Okay, I'll send you my. Okay, there it is. Okay, thank you.
And then you can also share your information with the group if you have the Sunday report. I think that sounds really cool.
Okay, thank you. Okay, I will note your email and then I'll share my information. Thank you. And Marina, thank you so much for sending me the link.
My pleasure. It's 2 o'clock Eastern time, just so you know, Arry. So it's -3.
All right. Well, thank you everybody for taking the time to join us on this Friday. We're here every Friday. Next week we have Rahul Sood talking about metaverses and GameFi, so that'll be really interesting. And thank you, Ivan of Stably, for your time and jumping in last minute. Loved your answers, and it was really, really informative. Thank you so much, everyone, and have a great weekend.
Thanks.
And we love seeing you every time. He's so big now compared to the first day when I saw him.
Yeah, he's getting bigger and bigger and louder.
I'll have to tell him I've known him since the first day.
All right. Thank you,
Thanks,
everybody.
Thanks.
All right. Welcome to Windshield Time, y'all. Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets for busy parents and working folks who are curious about these new technologies. Day, Arry, and their guests talk about these evolutionary systems of money and what they do, y'all. Because what part of your life does money not touch? This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again, and enjoy the show.
What are you doing?
Stuck inside.